Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's December 10th. This will be our chart lesson for today, and it was all downhill today. We had a little bit, really, from maybe 9:30, and it probably lasted till about noontime. We had this little correction here. Notice the green channel, the two-tier channel. That's what I played until late morning. Then we kind of went into this correction. Um, and then we had another then we had a spike down and went into a channel. But in the end, I think there's probably a bigger channel here in play and two-tiered. You can see um, this midline here. Everything came into play on it most of the day. Uh, so I believe it's in play as well. But you really didn't need it. It might have helped right in here to take these shorts, but there's other reasons to take those shorts. So you didn't necessarily need to have this bigger channel. In fact, it might have even spooked you out of some of these trades right in here. Um, but for the most part, it's all downhill. Notice there's no longs on here. Even in this channel, I didn't think it was, I thought it was too risky to take a long after that big move down. And we were finding resistance. And notice how this high, these highs are lower than these. Each high is lower than the previous high almost. You got, not necessarily here, but when you found resistance right across that same place again, all the way across there, you had to be worried about that. And then we couldn't even get back up there here. And if you draw these short-term trend lines, it kind of helps you on these corrections. And there's even one right here that was right up through there. You can see that, and you had your little break already and move up, and then a little fake out right there, and then it turned down. But you didn't need that anyway because you had the resistance up here, and the bias is certainly down. So let's back out a little bit where it's easier to see. There's just so much price action there. But really good trading day. When I came in, prices were working down, and this was a real clear channel here. You can see that. There's no doubt about it. It's very obvious. Let's just move these out of the way so we don't get all confused because you didn't really need this at this point. But you can see that channel working down through the green one. It's very clear, very obvious, and it was easy to see. So most anybody should have been able to find that one. It just works right off those highs. You can see it there, working lower. There's a clear midpoint in there as well. This may be just a little lower. About like that right there. Ah, that looks too wide. Move it back. Looks about it like it. And you can see the closes right across there. How they're on both sides of that line. So yeah, it looks pretty good right there. But anyway, this looks a little bit rangy here, but you're still working down, and then you finally touch lower and you come back to the high side, low side, high side. And notice we overshot it here and we undershot it about the same amount. That tells you your correction. You got your close outside, your correction's coming. You get a break, move to a new high. And you just have to be patient to wait for these things to play out, and then it starts going down again. But let's talk about the trades. The first one I saw, there's a nice second entry short here. Notice the new low, pull back first entry, pull back second entry. It's right off the EMA for the most part. It's right off that midline. A nice bearish bar. Look, closes on this low. You can go short there. There's a second entry short right there counting off the high, but I really didn't like that one. I think you were better to wait, and because this is a little bit rangy looking by this point. You got a lot of matching lows and some matching highs, but it breaks out, pulls back, and this is a breakout pullback short. But even better than that, you got a new high here, pullback first entry, pullback second entry. It's a failed second entry long, and then there's also all those matching highs across there. So a lot of reasons to enter that one, and off it goes. But the main thing is that trap, the failed second entry long. Then it bounces, first entry, pull back, second entry. Right off that trend line, you get a nice bearish bar. second entry short, go short right there. And man, this thing takes off this time. And there's actually a failed second entry long right here, but I think it's just way too risky to go short off the low side right there, because now you're expecting prices to go up. Um, and then you get a pullback and a first entry pullback. So there's your second entry. It actually makes a new low here. So this is more like a breakout pullback short after those matching lows. But the main thing I liked about this is if you count off the high, it's first entry, pullback, second entry. And you're looking for another leg down similar to that one, and you get it. And then it bounces. And the fact that it couldn't get down to the line and bounced and went up the upper side, that's a clue that we might get our close outside, and we get that. But notice this, you got a new low, pullback, first entry, pullback, second entry. And again, it's a nice bearish reversal type bar. Just go short there. And you might have gotten shaken out of this one because it didn't take off, and you end up with all those dojis. And that's a good reason to maybe say, hey, I'm going to go ahead and take a tick or get out of break even or whatever. But notice it does start making some lower highs here. That's a little bit of a clue. And this is a little trading range. It breaks out, pulls back. It's like a little breakout pullback short. But then you get the bigger double bottom and it breaks out and pulls back. So I liked going short right there. And this was the better entry, but you might have gotten shaken out of it. If you didn't enter there, I don't think you want to enter across here. You got to wait till here. And you're looking for a new low, and off it goes, and it makes its new low. And then you start trending up. And there was a possibility of going long here because you've got your close outside, a move to a new low. And even though this is not really a failed second entry short, it's close enough. I don't think you want to go short there either, so just sit tight. And you might have thought about going long there because you got a double bottom. It's close enough to treat it like a failed second entry short. But this thing has been so bearish, I just think you're better off to wait. And if you took that, great trade. We could probably mark that one in green. I'll go ahead and do it. I'm not crazy about it, but if you're paying attention, you might want to go long there. An aggressive trader is probably going to want to go long there. I think it's too aggressive for me, but I just think it's too risky. You are looking for a new high after this break of this little channel, and you did get a undershoot there. We didn't quite get there, so that means we'll probably break above it at least that much. And you see, but we already had the break in the new lows, so people were looking for that rally. So you get your break here, move to a new high, pulls back. There's actually a second entry short right there, big bearish bar. I thought it would take off quickly. It didn't, but it pulls back and just gives you another chance to enter right there. I think by that time, there's actually a failed second entry long. Notice the new high, pullback first entry, pullback second entry. So there's a failed second entry long. I liked entering there. It made me a little nervous when it backed up here. So, but if you held on, it worked. Your stop goes above your signal bar, which is this one on this one and this one. And if you entered here, it was tempting to even add on there. Probably would have made you a little nervous when it backed up there, but that's part of it. And if you stuck with it, it still works out. And then you get another second entry short here. Notice the new low, pull back first entry, pull back second entry, big bearish bar. You might have thought about using a limit order here, and you could have gotten filled even a tick back into that bar. You might have had to wait on it to pull back, but one like that, you probably just want to use a stop. And off it goes. But guess where it bounces? Right there at that low again. And it was real tempting to go long here, but look how much overlap. 1, 2, 3 bars. Really, this one's part of it. That's part of it. There's almost 5 or 6 bars there. There is a second entry long right there. But I just don't really like it. I think you're better off to wait and see if you get a short. Of course, you get a break here, move to a new high, pull back, and you get that little trap there and a chance to go short right there. And off it goes again. And there's actually a failed second entry long right there, but it's really close to these lows. It is a trap. It's another one we could probably make green. But there's just too many trades, and I had this conversation with somebody yesterday via email. When you're getting all these good trades, don't take these iffy ones. Even if there's a trap, if it's iffy, and this one, the only reason this one is what I describe as iffy is because it's so close to that strong support, and there's a good chance it hits as and bounce. And it actually did, but I still think you would have gotten out of that one before it bounced. If you use a stop, your entry was 43 and a quarter, and you would have gotten out of that one before it bounced, so it wouldn't have mattered. But sometimes you don't. And it's just a little risky when there's so many other good trades here. And then you bounce off, you get a little failed break lower. Again, I don't think you want to take any longs in here, though, because we're still working on this high is lower than that high. And these lows are lower than these lows. So you're still got a downward bias. So I think it's just risky going along. And you got a little channel working up here. You get a break, move to a new high, and then it sells off. And this is actually a second entry short off this main move up. Moves up, first entry, pull back, second entry. So I like this, kind of a bearish reversal bar. And then it tries to come back up again. And this is a little two-legged move down. I would have liked this better if it broke higher and then turned down, but it's still a big bearish bar. And notice how you couldn't get very high here again. So that's a second entry short, counting off the high. The second entry off the low was right here. Again, look, coming up, pull back first entry, pull back second entry. So another good entry. And this thing, again, it finds support right across here, but this time it breaks through, pulls back, and there's a failed second entry long right there. Look at that high, pull back first entry, pull back second entry. It breaks higher, fails, turns reverse, goes right out. That's a breakout pullback short. And the fact that you're making these lower highs is a clue that we're probably going lower, and look at it go. And man, this thing, the bottom falls out of it. And it just keeps working lower, and then you get a bounce. This one's questionable. If you have your midline, if you've drawn your bigger, let's go ahead and put this on here now. Because that'll help us with those other trades there. All right. And you can see that that's right off of that midline. Let's make it a little bigger. And there's a shorter term trend line down through here too. And so it's right off of that little shorter term trend line as well. And you can see that. But really, the play was off that midline in the EMA, and it's a big bearish bar. It pulls back and gives you another chance to enter right here. And off it goes again. And you're looking for it to come down to this low side, and notice where it bounces there. And this one was kind of questionable right here, but this thing was so weak. And by this time, you're looking at this as a spike in a channel. I drew that off those first couple of swings there. And it pulls back. Notice the new high, pull back first entry, pull back second entry. There's going to be a lot of people. This is a failed break lower, so this is going to trap a lot of longs. So I really like that one. And it kind of hung up a minute before it dropped on down. So again, you might have gotten shaken out of that one, but this thing was really bearish. And by that time now, you got to be looking for your measured move as well. And you were already well past it on that one, but you almost have to, even though that one goes, oops, wrong line. You almost have to consider that being the high of this move. And then you move it over here, and you see, and that gets you all the way down to here. And we didn't go much lower than that. So that was something else to consider as well. But then you're working lower and you bounce off this lower part of the channel, pull back, first entry, pull back, and there's another second entry short, and it's off to the races. And I didn't mark anything after that. That got you uh, into the 2 o'clock hour. And, again, I don't think you want to take any longs. We're way overdone here, so when it does bounce, you figure something like that's going to happen. But there were so many trades here. No reason to be taking any trades that late in the day. Um, I mean, there's just so many shorts all the way down there. You just about could short this thing at any correction on the second entry off the top, and you were good to go. Couldn't hardly go wrong. So, but that's what I saw today. Clear channel, a couple of shorter term ones in there as well. Um, a really good trading day. And I mean, really from the close yesterday of 57 or 58 in there somewhere, we're down here to 23. So that's a 30-point move. I mean, it just doesn't get much better than that. So hopefully you had a good trading day. Hopefully you were trying to get short, um, because that was the idea today, getting short wherever you could on the corrections and riding it lower. And so not much else you can say about today. Got a little flat right in here, but that's just, in my opinion, that's the correction from the first channel down, and then you started your new trend, and it really started right there. So um, actually, I guess it really started here because that's a lower high and lower high. But this is when, once you broke lower here and pulled back and then had your little breakout pullback short here, that was the real clue that we were headed lower. You don't know that it's going to do this. You have to draw your lines and stay with it and follow the price action. But, that's why you take these trades, and some of them give you a lot. Some of them don't give you what you think it'll give you, and others will give you a lot more than you expect to get. And so that's why it's hard to pick and choose when you're trying to get runners or get in a swing trade. You just about have to try to do it on each one of them, and they'll work out in the end. It's hard to do. Um, it's hard to condition yourself to do that, but that's a mental thing. Just keep working on it. And I get a lot of questions lately about the mental stuff, and that's the second step in trading. First of all, you got to find a strategy that works. And I don't believe there's anything that works better than price action, because there's no, once you learn it, you don't get confused. You don't get tricked by all these indicators and crazy ideas and trading with the moon or the sun or the way the wind blows or whatever. Um, you have to learn something that works, and this works. And it's my opinion that anybody that is profitable trading, even if they don't call it price action trading, I believe that they can read a chart, plain and simple. Back in the old days when they didn't have charts, they read the tape. They watched it enough to where they understood it, and they traded the tape. And today you've got a clear picture, so you don't have to worry about reading the tape. You read the chart; it's still telling you something. It would have been interesting to be able to understand all this just looking at prices, but that's what the old guys did. And we've got it a lot easier now because it's very visual, and there's a picture here. And these are like tracks in the sand or tracks in the snow that are left by the people that control the market. And so we can follow their tracks and know what they're doing by following the price action. Now, they fool us sometimes, but they're trying to fool you constantly. So the better you get, the less you get fooled, and the more you understand what's going on. And you get better and better at this. I still get better at this, and I didn't know if that was possible. But the more you sit here and watch it, and the more you figure, you see what's going on, you learn these little nuances, and you see these little tricks they play, and you learn it. But the first step is to learn a strategy that works. Well, this works. If you want to learn this one, stick to it. It's not easy, but in the end, you're going to be a lot more successful, in my opinion. But if this one doesn't work for you, find a strategy that does. Just make sure that you're not wasting your time. Make sure that it truly works, and learn it. And once you learn it, the second step is to get through the mental hurdles of trading, and there's a bunch of them. It's not easy to your mind is always going to try to talk you into horrible trades and out of good trades. And I see it both ways. People send me their bad trades every day that their mind talked them into, and then I hear just the opposite of, I saw all these good trades and I didn't take any of them. That's because your mental mind is talking you out of them, and just don't let it do that to you. Um, Stick with it, learn how to do it, and you'll get better at it. So, but anyway, I'm going to wrap it up. Not much else we can say about today. We'll be back again to do it tomorrow. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.